AMC stock is up 6.5% today, almost at $18 per share. This was the price target by the end of the week, in between $18 and $20 per share. And it looks like we are seeing a rapid ramp up in AMC's share price heading into earnings. You're also starting to see that cost to borrow spike, at least relative to what the cost to borrow has been over the last couple of weeks. Now, we're going to talk about exactly what is happening today. You're actually seeing growth outperform, obviously due to good earnings with PayPal, SoFi, and a couple other stocks yesterday, but it's also due to fears about a recession. You can see the yield curve is still inverting deeper here today. So we're going to get into earnings that are here in after hours. We're going to get into the ortex data, the technical analysis for AMC stock, and much more. So let's get straight to it. Hit that like button and subscribe to the channel if you guys have not already. If you want to come trade with me live in real time, link down below in the description. We have been making a couple trades today based off of some of the earnings in after hours, and I think it's going to be quite good. So I think you guys want to be a part of the action over there. Nonetheless, AMC stock sitting at $17.95 per share, up 6.47% at the time of recording this video. We have seen a perfect breakout yet again with AMC stock. Pretty much what we just seen in mid-July is basically happening again. We found resistance around the 100-day moving average for a couple days, like we did back here in between July 12th and July 15th, and then we gapped up above the 100-day moving average. But this rally looks different. This rally looks a lot stronger. After all, you have moved up 5.5% on August 1st. Yesterday, August 2nd, you moved up 9.69%, and today, AMC currently up 6.26%. So you are stringing together a lot more substantially green days, and that should definitely help heading into earnings, potentially to give us a breakout above the key levels, which the big level is really going to be around $20 per share. If you can break out of that, then you're pretty close to that 200-day moving average, and that would be the next level that we would really want to watch. But as of right now, I have no reason to believe AMC's rally is even close to finished. I think at the very least, you're going to get something similar to what we seen back in March. You're going to get up to those $20-$25 levels, and then possibly from there start to see an even bigger green day, right? Because a lot of these rallies tend to be smaller gains, and then you actually get most of the gain in like a 1 or 2 day, sometimes 3 day period. Same thing happened back here with AMC June of 2021, right? Most of the rally was actually 1 day where the stock went up $30.51. That was a massive gain, and that's where people actually made most of the money. So I do think you're going to see, I like to call it a pop-off event, where you just get a slow, consistent rally, and then you start to get those big moving days. So I think right now, believe it or not, is not a bad time to be getting a trade on AMC. You've confirmed that the stock is bullish, that you're seeing this breakout, that we're not reversing into that bearish trend like it looked like we might, going from 18 down to, you know, the $14 range. A lot of people started to get a little bit bearish, but that's where you got to watch the technicals. You got to watch the 50-day moving average. We held support there, didn't even touch the 50-day moving average, and then bounced straight back up, broke out above the key moving averages. So right now, right here, I am very bullish. The RSI sitting at 65.82. Considering we were oversold last time AMC was at these levels on the RSI, I think this is a good sign, and I think that could show we possibly have more upside from here before the RSI would get overbought. I think I said oversold, I meant overbought. And the MACD is now bullish as of yesterday, and even more bullish here today. Now let's talk about AMC cost to borrow rate. So AMC cost to borrow sitting at 16.4%. I said relative to what we have seen over the last couple of days and the last couple of weeks. The cost to borrow max was higher during that rally that we've seen that I just talked about towards the end of July. The cost to borrow rate was higher, but it started to spike like this before that rally happened. So I think this spike in cost to borrow here today, getting up close to that 20% level is really going to help put some pressure on the shorts in AMC stock. Now, the cost to borrow average is 9.39%, and the cost to borrow minimum is 7.94%. So those numbers looking very encouraging to me. The dollar amount of shares that is currently sold short, sitting at $1.65 billion. Estimated short interest of free float, 18.96%. And free float out on loan, 26.28%. Shares out on loan, 135.48 million. Days to cover sitting at 3.25. That's something you guys got to keep in mind as well. Days to cover is so high, right, at 3.25 because the volume has been so low. So when the volume has been low and you have a high days to cover, that means to cover all of the 19% short interest, it would take 3.25 days minus any of the option activity, minus any FOMO buyers, right? So that kind of puts it into perspective that, you know, it could be a multi-day event, but at the very least, you have a big imbalance between supply and demand relative to the volume that we have been seeing. Now, as far as the option activity, look at some of these orders coming through. January 20th, 2023, a $40 call. A January 20th, 2023, $30 call. Now, why is this so substantial for January 20th, 2023? Well, because you're going to be approaching January very, very soon. And hedge funds, when you have millions of dollars, they don't like to go far out the money with their options. Think about it like this. If you could buy higher quality options and you could afford to, you would, right? And if you spent, call it 10 million on an option trade or 1 million, whatever your figure you want to use, whatever number you want to use, well, if you get 100%, you doubled a large amount. So you don't necessarily need to get a big winning trade relative to retail investors that put $50 on an option. If you make 100%, you made $50. Whippity do. It's not a huge deal, right? Hedge funds, they have money, they can afford to buy higher quality options. So when they're buying these relatively low quality options where AMC would have to more than double from here to even make these contracts valuable over the next 4 months, it puts it into a little bit of perspective that these hedge funds are quite bullish right now in the current moment. Now, for the day, you're seeing 16 orders totaling $619.42 thousand, positive order value of 63%. AMC stock back up about 6.5% at the time of recording this video. Now, other things that are happening in the day, you do have the federal funds rate monitor tool pricing in a 19% chance of getting a 75 basis point rate hike after the Fed speakers that we have had today basically are saying that they're open to whatever as long as the data supports it. If inflation goes higher for that August 11th reading for next week, well, the markets are going to freak out because we're going to get a 75 basis point rate hike. If inflation goes down, well, the markets are probably going to be confirmed right, and this rally is probably going to hold a lot more weight. Now, tomorrow, as far as economic data, you have ISM non-manufacturing PMI, and you also have Fed Harker that speaks, and these Fed speakers, they've pretty much been in unanimous agreement that there's a lot more tightening to go, but they could start to slow down as they have front loaded a lot of these rate hikes already for 2022. So the markets are looking out, 6, 9, 12 months right now, and they're saying, hey, the Fed's going to stop raising rates 6, 9, 12 months from now. And that is a big reason why the markets have rallied, even though the Fed keeps saying that they're going to raise rates, but at a slower pace. Now, on the other hand of that, earnings have been better than what they could have been. They haven't been great. A lot of companies, I won't say most companies, but a lot of companies, the highest percentage of companies, about 30, 35, 40% of companies have actually missed earnings expectations, but they haven't missed by that much on average, only about a 3% miss. So it's not that companies' earnings are falling through the floor like they could have, and that's why the markets are reacting bullishly to most earnings that are coming out as of right now. But on top of that, we do have a lot of fears still about a recession. And when you get a recession, I've talked about this before, but you don't have growth in the organic economy. But if you have growth stocks, call it a Fubo, a Square, an AMC, a PayPal, a SoFi, Airbnb, some of these stocks that have been reporting earnings, well, there's growth there. So investors look to buy that growth because there's no growth in the economy. So that's why a lot of your higher growth stocks have been well outperforming your value stocks, your healthcare stocks, some of these other so-called recession stocks. So it's actually a myth that growth stocks do bad during a recession. Overvalued growth stocks do bad, you know, right when a recession starts or even before a recession. But once you're already in a recession, which we're in a technical Wall Street recession, growth stocks tend to outperform value stocks by a pretty large margin. Now here today in after hours for earnings, you have Lucid and you have Robinhood. You have Booking Holdings, you have APA Corporation, Mercado Libre, Marathon Oil, and Energy Transfer. Those are going to be some of the biggest earnings. Lucid, Robinhood, those are going to be the important ones that will affect all fintechs, banks, anything, you know, in the trading field as well. Robinhood will affect that, as well as Lucid will affect electric vehicle makers and just auto stocks in general. So that's really what you guys have for the day. And if you look at the yield curve inversion, we are inverted 37 basis points, continuing to invert another 3 basis points here today. This is a strong sign that there is a fear about a recession, a growth slowing down, or potentially inflation remaining high for too long. And this is helping, like I said, to fuel that rally in growth stocks. So, ladies and gentlemen, that is all for this video. Keep calm and buy the dip, baby. Thank you guys for tuning in. Hit that like button and subscribe to the channel if you guys have not already. Help boost this video out to as many people as possible, because I'm sure they could get something out of the information that was provided here in this video. If you guys want to come trade with me live in real time, link down below in the description. Don't founder on that opportunity. It will never be this cheap ever again, and it's definitely a good place to be. So that is it. You guys enjoy the rest of your day, and I will see you in the next one.